guys, and welcome to today's emergency webinar. For those that have been coming for a while, you know this is the very first time that we've done this. And, for others that have been on my special email list, I was here in the middle of the night on Thursday night after the Brexit vote, letting you know what's going on. To me, this is a huge, big deal because it is a major escalation in the trend. I've asked Eric to sit in on this session today, which is absolutely unrehearsed or anything like that. So we're going to have conversation. And the reason why I asked him, this is Eric Griffin. Number one, because he's very, very bright. And when we were having our meeting this morning, he brought up some really valuable points. And so I asked him to join me in this webinar today. So you'll have to forgive me for a moment, because I want to make sure that you understand the foundation of what we're doing. For those that have not gone here, what this is that the currency markets are breaking down in a huge way. And what I'm talking about is the peg between the currencies. These are pegs, so I want to make sure you understand what that is and then why that's important. So let's say that I want everybody to think that I'm just like Eric, but he makes $200,000 a year and I make $50,000 a year. Okay, I want the same interest rates that he gets, I want the same kind of deals that he gets. So I peg my economy to his economy. Well, as soon as you create that peg, that means that whatever he does with his money, I have to do exactly the same thing, even though our economies are different. So he decides to go out and buy a fancy new car. Well, he can afford it, or maybe he can afford the payments. I absolutely have to do it on payments. So I take on debt to buy that car. And then he decides to go on a shopping spree. Well, I have to also go on a shopping spree and I have to buy the same thing that he buys. But he's got the cash for it. I have to do it on credit. And then he decides to go on this big whirlwind cruise. Well, off he goes, but nobody will give me any more credit, so I can't take on any more debt to do it. And so now, while he goes away, okay, I am left with all of this absolutely unpayable debt. So our economies are different, and as long as I can keep taking on debt to do that, not a problem. But no two economies are alike. So in the Eurozone, when they created the euro, it was doomed from the beginning. Because who does not know that Greece's economy is not the same as Germany's economy? And as you can see, Britain's economy is not the same as the other countries in the Eurozone either. Now, they showed us quite clearly that what they really wanted to do in all of this was keep Greece and keep the Eurozone Union together. They should have let Greece go. But what they couldn't do in several years of austerity and all sorts of things, Great Britain did with a vote. Now, the difference between, I'm going to go to, so all currency pegs break, and please bear with me because we've just got to go through this. Those of you that have been coming for a while know that the first currency breakdown of the peg system occurred January 15th of 2015 with the Swiss surprise. Swiss's currency was tied to the euro currency. The euro currency, the Eurozone announced lots more money printing, etc. This was a very violent decoupling or depegging. The next one that happened, I'm going to grab my pointer. This is what that looks like, this straight down action. That is not gentle, it is very, very violent. The next big depegging, and then we're going to go to Q&E, was the China surprise, and they did it twice. They did it in August, and they did it again in December. So it seems like these pieces are escalating, and it also seems like so far they've been happening about every 6-7 months. So January 15, August 15, December 15, and now June of 16. The difference between those previous ones and this one, those previous ones were a choice by governments and central bankers. The Brexit was the voters. Remember, I've told you over and over again, what's holding the whole thing together is confidence. So we know that confidence amongst the banks is gone. Banks don't loan to each other, interbank lending is dead, that's done. The central banks know they can't trust each other, that's gone. The only thing holding this system together is the public confidence in the currencies and the financial system. And what the Brexit shows you is that it is eroding in a very large way. So now we're going to questions.
So, well, a couple of things really
Okay,
quick, because
yeah.
I was actually
Okay,
reading
sorry.
before we came in here that I think it was Greenspan said that he felt like David Cameron made a mistake by letting it go to referendum. That he shouldn't have done that. Now, I have a question though about, because you were talking about currency depegging. Now, is when they voted for the Brexit, is that essentially, because I know they weren't involved monetarily, right? Because they weren't using the euro, they had the pound, right?
Mm-hmm.
So when they're voting themselves out of the euro, are they essentially then removing, they have a peg currently with the euro and they're saying we're no longer going to be pegged to that euro?
Well, they do have a peg. They're on different monetary systems, which is why they can do it. But it's more a full integration of immigration, financial plans. City of London is certainly one of the 3 financial centers in the world between Rome, New York, and the City of London. And they operate on their own set of laws. So this really impacts the entire global financial system, this choice to lose the EU. So the only thing that allows it or enables it, different than what Greece was doing, is Greece was on the euro dollar. So you have to understand that there is a difference between the euro dollar and the EU system. A few years ago, when I traveled with my girls, we went to Hungary, Austria, and the Czech Republic. And I don't know what I was thinking at the time. I was paying attention to the currencies, so I happened to buy the currencies all at the same time, not thinking about using the euro dollar in all 3 places. So when I got the currencies back, and I bought less of the Hungarian forints, when I got them back, I bought $2,500 worth of forints, Hungarian forints, and then $3,000 worth of euros. The euro stack was about that big. The Hungarian stack was like that big. And my first reaction to it was, wow, they must be experiencing some high inflation. And that actually is accurate. I mean, you'd buy a pack of gum for like 1,200 forints. So that was an indication. But what was particularly interesting, and remember, I bought all these currencies at the same time. So I jotted everything down, what was it worth in terms of dollars at that when I bought it. When you'd go out to a restaurant or buy anything, you had a choice. You could use the forints or you could use the euro dollar.
So every currency was pegged to the euro in some way?
Absolutely.
Okay.
In some way, and their financial systems are all integrated, etc. So yes, they were all pegged in some way, but there were some countries, and Great Britain isn't one of them, but there were some countries that are still on a dual currency system, and you could use either one. And Hungary happened to be one of those. I calculated out that it cost me, I didn't use the euro dollars, because it was 20% more to use euro dollars versus the local currency, which was really kind of interesting and also very surprising. If I hadn't, I don't know what I was thinking at the time, but if I hadn't thought about it, I wouldn't have even realized, and I would have just spent 20% more for everything that we did. But there are, there's the Eurozone, and that consists of, I think, 28 countries. but not all of them are on the euro dollar, and Great Britain was one of them. However, they were fully integrated, where you could travel from place to place, although that started breaking down a while ago. This isn't really a huge surprise. It was really more of an accident waiting to happen. But it is the beginning of the demise of the euro dollar, which was a failed experiment from the beginning. And it isn't just, well, that was there and this is here. We are in a fully integrated global economy. Even Janet Yellen said she can't raise rates because of what might be happening with the Brexit. Of course you're not going to be able to raise rates. You know, that was a joke anyway.
So let's you and I talked earlier today, and I think it's important for us to address kind of what people have been saying. We've heard customers talking about, or you hear on the talking heads, I point towards the TV because we always have CNBC going on here, about, oh, well, it's going to take 2 years, you know, before it happens, or, you know, the British government could block it and block the referendum and stay in the Eurozone. And we talked about that the most significant piece about this is the confidence, and that's what's the most important. So talk a little bit about that with them.
That's great, and there's actually, I'm having trouble moving this thing.
Because in reality, I wouldn't be surprised if they did block it, right? If the government came back and said, no, we're going to stick in, right?
Right, and there's supposed to be a whole lot more referendums that are coming out throughout the Eurozone. It doesn't matter whether the government blocks it. It doesn't matter if they try and postpone this over a long period of time. What's really happening is the loss of confidence from the population, the public. And it's that 100th monkey theory, right? You're sitting in a movie theater and you're watching a movie and somebody gets up and they walk out the door and you don't even turn around and look. It's not a big deal. But if a couple minutes later the next person gets up and rushes out of the theater, now you're kind of going, oh, okay, but you go back to watching the movie. A couple minutes later, somebody else gets up and rushes out of the theater, and now you're going, what's going on? And if a few minutes later someone else does, before you know it, at some point, everybody rushes. And so that's why this is significant, because it's showing you that we are that much closer to the complete collapse of confidence. And we are seeing that globally. It's not just this referendum. And even if they backtrack, even if they don't allow any more referendums, you can see that, you know, on this graph that you can't really, there's a complete loss of confidence in all of the members, well, not all of the members, but a chunk of the important members in the EU. So it's that public accepting the currencies, accepting the financial system, accepting the politicians. In this country, we can see it through Donald Trump, the rise of Donald Trump, and we can also see it in Texas wanting to secede from the country, and in a lot of the states now legalizing gold as money again. So we're witnessing this erosion in confidence. And since it's public confidence that's what's keeping this together, once that 100th monkey stage is reached, it happens rapidly.
I'm starting to even see it in people that are friends of mine who don't know much about the economy and what's really going on. More and more people are starting to wake up to the system's kind of rigged. And people are talking about it a lot more than what we saw in 2007 and 2008. I think and I think the governments are really concerned with that erosion of that confidence, since, you know, I mean, you talk about, I usually sit over here, you know, she puts together the content and we go over it and we edit it together and we work on it a lot. And so usually I'm over here, you know, with her, just making sure, you know, we're on track and everything's going good. So it's interesting to be over here. But I think you know, I was reading that they were saying Scotland will be up next. Like they're going to put the referendum, like they already had one, is that right? And now they're talking about doing it again. Which if it becomes a crescendo, so then the real question is, and I have no idea what the answer to this is, and maybe hopefully you do, is what happens, how could that affect us here? If it does crescendo and all of a sudden now you've got a domino effect,
That's exactly
and the
how
EU falls
it affects
apart,
us.
how does it affect us?
I'm going to show you how it is impacting us.
Okay.
I mean, has anybody really been watching what's happening in the markets? And I mean, I just kind of slapped this stuff up here, so please bear with me, okay? To go to
I
that.
don't think you told me you were on vacation all weekend.
Yeah, I didn't even look at this all weekend, you guys. I was, but anyway. They call this an earthquake, okay? This isn't a little seismic one. This is down to the very core of the financial system. And remember, all of the there are 41 systemically important financial institutions. So we're talking about banks, insurance companies, pension plans, all of these things. There's only 41 globally. They are all completely intertwined. So if China sneezes, the US gets a cold. Well, Europe has sneezed. The most troubling quote in here is Alan Greenspan. I don't know how many of you saw it. I'll be sending out the video so you guys can read it. But this is the worst period that I recall since being in public service. This is Alan Greenspan. There's nothing like it, including the crisis. Remember October 19th, 1987. I was there. I do remember that. When the Dow went down by a record 23%, I thought that was the bottom of all potential problems. This has a corrosive effect that will not go away. I'd love to find something positive to say. So here is the maestro saying he can't say anything at all positive about what's going on. This isn't just an isolated incident. It is rattling the very foundation of the global financial system, which is the money system. And you have to have confidence in government created money, because what backs it? The full faith and credit of the government. Translate those words. As long as you have confidence, so you have faith, then you continue to loan them money, extend them credit. Well, that confidence has really been eroding since 2002. 2002, we could no longer find enough buyers of our treasuries to fund it. So at that time, the central bank started buying back the treasuries really quietly, because it's a bad thing. When QE came along, then it was obvious. Now everybody, it's become the norm, because there are no flippin' buyers for the debt of the countries. And Richard Fisher recently exited from the Federal Reserve, and what does he say? They can't expand the balance sheet any further. Let's look at what that looks like, because that matters. This is what the central banks have done since the crisis. Well, what tools do they have? Money printing, which is not being effective. I can tell you right now, there is a ton of money being injected into the banking
Well,
system.
and later in that article, I know you read it too, Greenspan said two things. One, I don't know how this is solvable.
Right.
And number two, we should be on a gold standard.
Yes, he did say that.
He said if we would have just stayed on a gold standard, we'd be fine.
Fine, exactly. Because inflation is impossible. This debt creation and this money creation, and he was definitely instrumental. Before he became part of the Federal Reserve, he was all about the gold standard. In fact, that's always like one of the slides that I put up there to begin with. When he became part of the Federal Reserve, that was different. And now that he's trying to create his legacy, as soon as he left the Federal Reserve, he went back to that position.
So I got a question for you,
Yeah,
because this morning, like you called me on Friday on your vacation, all amped up. I came in this morning, you were all amped up. So just tell everybody what we were kind of talking about earlier. What should we really be looking for? What should we be concerned about right now? Because obviously it's one of those things where you mentioned it earlier, so used to just domino after domino after domino
and
falling,
that's the problem.
and we all just go, oh, it's going to be fine. Everything's going to be fine, right? But you were visibly a different person this morning than you normally are. Just super fired up.
Exactly. And and again, I came in the middle of the night to get that client email out because of it. And so really the domino effect is if they can't keep everybody calm about this, then it's game over now. We're out of time. And the problem is there's no liquidity in the markets. So what they're really trying to do is engineer a soft landing. Because remember, the liquidity is the buyers on the other side when people want to sell. So just one or two, no problem. But that's really not what's happening in any of the markets. You know, this is what's happened with the Dow. I mean, hey, Wednesday, Thursday, you could have sold the Dow up over 18,000 or around 18,000. As soon as that hit, it was down over 800 points, right? So what I'm concerned about is that they will not be able to keep it calm. And one thing I do want to comment about, and I'll see if I can't find something to show this, but in 2008 when the markets were behaving like this, Kramer was on there going, they know nothing, and having
and he was
a
saying, get out of the
massive
stock
cow.
market.
Yes,
Yeah.
he was. Get out, they got to give him money. Okay, Friday morning, I'm listening to it as I'm getting ready to go on vacation. Yeah, everybody just needs to stay calm. It's going to be okay. It's going to be a couple of years. I mean, their tone was like this, was just like this. Listen to them. What they're trying to do is keep you inside of the system. But what, and I've talked to a few people this morning
what
too.
other choice do they have, right? They don't want it. They don't necessarily want it to unravel like super fast, right?
Oh, right. They're trying to engineer a soft landing.
They have to make us feel confident. They have to keep us from freaking out.
Right.
And running to the bank and taking everything out. I mean, they have to.
Well,
So, I mean,
they have to, but then everybody has a choice, right?
Mm-hmm.
I was talking to somebody this morning, and he goes, "Well, I don't really even want to call my broker because I really like him, and I don't want to hurt his income." Oh my gosh. Who cares about his income? He didn't care about it when he put you in there. If he doesn't know that this stuff is going on, if he doesn't understand how money is created and supported in the system, when this is the foundation of it, why would you listen to him? I mean, really, isn't his job to keep you informed and help you make educated choices that support you? But I'll tell you, the portfolios that I analyze, some of them aren't horrendous for a fiat money market, but again, how's money created and supported? If any of you guys out there listening have money in the markets, call your broker and ask him this question. Tell me, how is money created and supported in the markets? That's a simple question. Here's the answer. It's created by debt and supported by the ability to create more debt, full faith and credit.
Right, which
That's
the
the
fiat
answer.
money system is, we're all involved in it. It's okay to be in it, but the day it collapses, not good.
No warning. No flipping warning. And it isn't even the day that it collapses.
Speak to this here, because you mentioned something this morning, and I didn't get the whole of it.
Okay.
Because I think you were just kind of going by it really quick.
I know, and I'm sorry,
But you said
guys.
something about in here, at this bottom level here, you were going to do some research and see if they were supporting it with some kind of contract, contracts or something?
The mini contracts, and that information is not out yet.
Okay.
Okay. And anybody that's been to like the manipulated markets where I showed you those mini contracts where they could move gold, 100 ounces of gold, right? This is through the CME group. And they're derivatives. They're derivatives on the stock market.
Moving the Dow with small amounts of money.
Correct, and supporting it.
And who has access to do that? Is it?
Well,
only
you and
those
I
40,
don't.
Only like the 40 globally important banks.
And the central bankers.
Okay.
And the central bankers and all there's a whole group of entities that's a CMA, like the plunge protection team and all those guys.
So you got to think they were in here manipulating at this point, like going in and buying up contracts to stop the flow, right?
Absolutely.
I mean, because it just drops and then all of a sudden it starts to recover.
Right, exactly. And that's also probably why you don't see gold up over $200 an ounce either. So yes, I'm definitely paying attention to that. I tried to find it before this meeting, but it's not published yet. And also the money injection, it's not published yet. They don't want you to know what's happening when it's happening. Okay, but it is happening, and they are trying to manipulate these markets to keep everybody calm. I am not calm. Okay, I am not calm. I had a client ask me last week, because I haven't been sleeping lately, as you know, and I haven't even been eating lately, as you know, and it's like this energy. I really did not think that they were going to vote out.
No, you told me on Thursday there's no way they're going to let it happen.
Exactly. I figured even if they actually, the public did vote out, that they would not announce that they would still vote in, because I didn't know whether or not they were actually ready for this kind of result. So this surprised me too, to be really honest with you.
Well, do you think it could be a test to see how we'll all respond to something like this?
I think they're trying to engineer a soft landing. I don't know.
Now,
that
when you
this
say
is a
soft
test.
landing, you mean unravel it a little bit at a time?
Correct.
Okay.
Right. It's like the frog in a pot of water.
Just slowly
Okay.
turn the heat up.
Exactly.
Okay.
And I think that's what it is. Because if you keep money, I mean, that's what they want. They want your wealth inside of the system, because that's a button push to be done. And it'll be interesting to see after
Well,
this.
if you take it out, it crashes the system quicker.
Exactly. That's exactly right. And it isn't so much that it crashes the system quicker. It's that if a lot of people go to sell at one time, then it's going to be pretty obvious that there are no buyers. I mean, they've already halted trading on the financial stocks in Great Britain. They had to. And also probably in the EU. They had to. Royal Bank of Scotland, which is one of my least favorite banks. I mean, they make it sound like it's the, it's a central bank, but it's not. And all of these banks have been caught in so many scandals. And I'll tell you what's really a big concern, and we aren't going to know because it's OTC, and that's the derivatives. You know, with what's happening in here, at least the foreign exchange derivatives have to be going crazy. Because most people didn't think the Brexit would happen.
Have you? I didn't look today. Did you look and see how was the euro affected by this? Did we see a crash in the euro?
It's not so much.
And did we see a boost in the dollar?
Well, yes, we definitely saw a boost in the dollar, and actually, let me show you this because I think this was kind of interesting. And this is the euro to gold, and I guess I didn't do my animations properly. So what's been happening on a global basis is there's a flight to safety. Okay, so the euro dollar is weaker. Okay, the British pound is weaker. That's against the dollar. All currencies right now are weaker against gold because there's a flight to safety. And the other place where you're seeing it manifest, okay, there's the euro and how gold has behaved through this Brexit. Thank you. Let's see if that works better. Okay, and there's the British pound. Okay, up what? Well, somewhere like $44 or 44 pounds or something like that. This is the other flight to safety, which is a joke, right? That's what's happening in the bond yields over in the UK.
Say about, I can't see that. Is that June 16th?
That's the yield.
Right there?
Yeah. This actually was an article on Bloomberg. So this is the response to the flight to safety. They're flying into gold and they're flying into government bonds, which is a joke. Because what makes up the government bond? The British pound, right? What makes up the U.S. Treasury bond? The U.S. dollar. And remember, there are three ways to value a currency. One is against other fiat money. So when you asked me, so what's happening with the pound and what's happening to the euro, that's really the question that you're asking, is how is that in relation to other currencies?
Right.
Okay? Both of those, whether it's the pound or the euro dollar, are down because the eurozone is now breaking apart. But the one that really impacts us the most is purchasing power. So if you go back, this is protecting their purchasing power, but not paper gold. because paper gold is made up of the British pound too, or the US dollar, or what have you. You've got to have physical outside of the system.
Because that's the only way to ultimately protect yourself. I mean,
Well,
sure, you're going to see price swings, but it's all in fiat.
It's
She's
all in
always
fiat,
she's
exactly.
always saying to me, because I'll ask her, well, what do you think I should invest in? Well, the only thing you can invest in right now is really gold and silver because of the shakiness in the fiat money products and the fact that we just don't know when. We know that it will, but we just don't know when it will all ultimately unravel, and it'll be. You're always saying it'll be in a heartbeat.
It's actually, when you ask me the when, and that's what people always ask me, and what they're missing is it's been unraveling for 103 years. It's been unraveling for you since the day you were born. That unraveling piece is speeding up because we are at the end of this experiment. And that's what really Alan was referring to. I guarantee you Alan Greenspan knows more about money and currencies and the systems than I do. And my mother always used to say to me, but Lynn, don't you think Alan Greenspan knows more than you? Don't you think he does? And I would say to her, well, I certainly hope he does because he has a whole lot more influence than I do. But if he actually believes what's coming out of his mouth, then no, Mom, he doesn't.
Well, but I think ever since he actually retired from the Federal Reserve, he's been a lot more honest because he's not having to manage perceptions, right?
Exactly.
So he can actually say what he really thinks, finally, rather than tell it to tell the American people how it really is.
Exactly.
Well, I think he pointed to one of the massive problems that the United States is facing is that you have inflation going up and wage inflation is not going right along with it, which ultimately creates this massive imbalance.
Exactly. And when you couple that with all of the entitlement programs like Social Security and the defined benefit pension plans, etc., I mean, the when is when am I going to be aware? It's not when is it going to unravel. That's really what we're seeing here. Exactly. And that's actually what he's referring to when he's saying this is the worst period. Okay? He's seeing it. I don't think he thought he'd see it in his lifetime. I really don't. I think that he thinks he would have been gone long before this unraveling, and it's speeding up. This is a
just
big
like the Fed's
flippin'
balance sheet.
deal. Exactly. And how much more, seriously, how much more can they grow? And remember, they don't have any standard tools anymore. On October 3rd of 2008, they used up all their bullets. The only tools that they really had and have is money printing, so here you go, and interest rates. There you go. They don't have any tools. And all of these extraordinary tools like the negative interest rates, like paying banks interest to hold reserves, like accepting corporate bonds to put on the central bank's balance sheet, which means you and I taxpayers are responsible for them. All of these different things that they've done, has it been working? That would be a no. Because if the global economies were better, people would not have voted for a Brexit. People would not, they would go to a more traditional, even in this country. And, I'm not a Hillary fan either. I'm not really political. I am definitely economic. But, we would not be looking at somebody like a Donald Trump. You would not see, Texas wanting to secede. And they've been trying to do that for a while, build their own vault. That's what's happening in Europe. With the negative interest rates, the banks are talking about building their own vaults rather than paying that. They're going to push us to cashless because they have to. They got to control us. So, physical gold and silver.
They got to keep us spending.
Exactly. And physical gold and silver was important to preserve your purchasing power before, but now it's about your principal as well as your purchasing power. Period. I mean, well,
if anybody walks the walk, you walk the walk. You talk about it, and you walk the walk.
Yeah.
I mean, from everything you do at your farm to only investing in gold and silver.
Yep. I mean, this is what's happening in the global stock markets. okay? And I took this just before, see the date, I took it just before.
That's
You
all
know-
world indexes combined?
Yep, yep.
Okay.
Okay, and you know you're in a negative trend because what do you have? You have lower and lower highs. So what they've been doing isn't working, and look at this. How come you didn't sell your stocks over here? How come you didn't sell your stocks over here or over here? Because it's the pot in the boiling water. So this is what's happening to the global stock markets. And then you saw the big drop down in the Dow. So this is
And that's
manipulated.
just day one, right?
Yep. I mean,
What are we down today?
what are we? I don't know, like 300 points or something like that, because that wasn't
260.
published yet. 260. Okay. What are you waiting for? Or are we still over 17,000?
Yeah.
I think so. It's
Yeah.
a flippin' gift.
17,140.
It's a flippin' gift. Now, can they engineer it higher? Maybe. I mean, they're just trying to stabilize it. But this, this is coming in the next year. You're getting a little bit of preview. Okay. These are the confidence that the banks no longer have in each other. This is interbank lending. Banks will not loan to each other. You have to go all the way back to the 70s to see the current level of lending activity. That confidence is gone. Then with all those other Swiss surprises, where up until January 2015, they were working together in a coordinated way. Sorry to see this is like a little bit early. They're not coordinated anymore. And Americans overall, just in this country, they don't trust the government. 19% of the time, the confidence is gone. This should be your wake-up call. I do not own a stock. I do not own a bond. I do not own an annuity. I do not own a CD. I do not have a savings account in the bank. Yes, I have a checking account and I keep a minimum level in there so that my automatic payments go through. Where when I have to make a mortgage payment, I make a deposit. I keep cash out of the system because these banks are insolvent. I mean, I think the average, don't hold me to this because I'm not looking at the data, but the leverage derivatives to assets, which are your deposits, people, make no mistake about it, I think on average are something like 30 to 1. And with the huge amount of debt already in the system, this is what Fisher's talking about. How much more can they grow that balance sheet? And it's not working anyway. The charts tell you the system's breaking down. You think you have time, you want to wait until the money, till the markets recoup so you don't take any losses. I got news for you. A few percent is much better than 100%. Because when they halt trading, who are you going to go to? Oh, wow, I want my money back. Too bad. What do you say when the computer says no? And that's where we are. And when that 100th monkey leaves, when that final snowflake hits that big pile of snow and creates that avalanche, it's too late. When it becomes obvious, it's too late.
I don't think you could have any more passion about this. Let's see what questions we have.
Okay, let's go to questions. Okay, why is a successive depegging back, or were you meaning why is that happening? Well, because again, no pegs last. And so really the Eurozone, they recently voted to increase the money printing, the QE. They've gone deeper and deeper into negative interest rates. The austerity that they've put on everybody has been on the public, not on the governments, and people are pissed, pardon my language, but they are very angry. They don't feel heard. And ask yourself, do you feel heard? Do you feel represented in Washington? Do you really think that your circumstance or your children's circumstance matters to them? And that's really why. And it's going to continue. This was the shot across the bow. If you haven't gotten into position yet, I mean, I don't know what to say. I'm watching this whole thing unraveling, and I'm reasonably certain that anybody that's watching this doesn't pay attention at the level that I pay attention and doesn't
No one
understand
does.
the markets at the level that I understand the markets, and I don't have any of my wealth in there, period. Because it is happening. I just don't want to lose all my choices. In the past, when the dollar index declined, precious metals rose. So how is it that the dollar index is rising at the same time precious metals are? Great question, Karen. And, okay, so I'm going to back up a little bit. Remember, a rising gold price is an indication of a failing fiat currency. It really is that simple. So when they took us fully off the gold standard, when Nixon handed all control over to the central banks in 1971, they needed to make sure that you did not think about gold as money. And so what they did was they treated it like a commodity, and it was really more tied to the stock market. So stocks up, gold down, stocks down, gold up. And people got used to that for a really long time. But that actually shifted, and I was here, I remember it really well. October 9th of 2002. That was actually the last confirmation formula that I wanted and expected to see in the transition into the final phase. When that happened, then gold started to behave as a normal currency again against the dollar, and that's really what you're referring to, Karen. So gold, dollar down, gold up, gold, dollar up, gold down. But the shift and the breakaway from that actually happened on July, I could be off on the day, but I'm thinking it was the 9th of 2006, though that shift occurred before that. So I'll send out to everybody that's come today and probably do an email on there, and you'll see the relative performance chart where gold began to behave as its own independent currency once again. Now, it almost breached that $2,000 level back, I think, in 2011 and again September. In 2013. And that was right about the time when Germany asked to repatriate the gold. And you can see the visible whack down shift, I have all the proof on this, of where they started to push the price of gold down because psychologically gold above 2,000 is a threat to the fiat currency system. So the moving in the past as a mirror image, that was actually over a long time ago, whether it was against stocks or whether it was against the other currencies. Now they went into full manipulation mode as we entered the third phase. And that's what we've been experiencing ever since.
Well, and to answer that question too, if the euro's going down, that's going to force the dollar to rise, but also people would be piling into gold at the same time, which would also cause, so supply and demand also would create that same issue on any given day.
Exactly.
In fact, I think on Kitco's website you can see, did the dollar's move today actually affect the total price of gold? Because the dollar only has a certain amount of effect, and then buying and selling has another portion of the effect.
Right, right.
So you can have gold rise while the dollar's rising at the same time because people are buying it.
Exactly. Yeah. This is why I asked him, because he thinks of things that I don't, and he's really good. Okay. So Bob asks, what can you do with the pensions and 401ks that are tied up? You cannot touch these funds until retirement for the most part. Well, if it is a defined benefit, I would have to look at the documentation, and so it kind of depends on how it's set up. With a defined benefit pension plan, then that's probably accurate. So what you want to do is you want to make sure you have the proper amount of gold to protect that and recoup those losses. On the 401ks, that could also be true if you are currently working for the same company and currently funding it. But you might also have the option of, and you might want to write this down if that's your circumstance, to call your administrator and see if you can do a in-service withdrawal roll over election. If you can do that, that would enable you to at least move some. It wouldn't be 100%. Typically, it's either 50% or up to 50,000 that you could move into a traditional IRA, and then you could frankly take a distribution from that. Pay your taxes, pay your penalties, but it would at least give you access to some of it.
You should probably say that wording again, an in-service.
In-service withdrawal roll over election. Okay? And I'll put this in an email too.
Let's say that he can't do that though, and he wants to get to it. Is there any other way?
If he has the right to borrow, that too. And then typically what they'll do is they'll set up a repayment plan over 5 years so that it's not classified
so you just make
as
a
a
monthly
distribution.
payment.
You just pay yourself back, and if during that period of time you leave service, they'll either say, oh, you got to pay all of it back, or it's simply classified as a distribution, and then taxes would be due and penalties and all that. If you can't touch any of it, then you want to make sure that you have the right amount of gold, again, to recoup those losses. I mean, there's lots of functions of gold, but you need to be able to
Essentially,
protect
you're saying
that.
hedge it.
Yeah,
Hedge
that's exactly
the
what
fiat
I'm
money
saying.
products with the gold and silver.
That's exactly what I'm saying. And not so much with the silver. It's more with the gold, because the gold's a primary currency metal. Silver is the secondary currency metal and has two different functions. So for the gold, and depending upon what you have to work with and how much you have to protect, then there would be different levels that you would use. So talk to your precious metals consultant, because they'll be able to guide you in that area, but that's what you need to do. If you cannot touch it, then you need to protect it. At least that principle. How many states can use gold as of today, and which states are they? Great question, Henry, and one that I will do some additional research on and send it out. I know Utah, I know Texas. I think in Arizona, I think they passed it here in Arizona. They don't really talk about it a whole lot.
You don't hear about it very often.
I'll send that. I'll do some research on that and send that out, Henry. I really don't know that off the top of my head. And Wendy asks, when income from Social Securities...
No, will.
Will income from Social Security and pensions still come? Well, at this moment, I'm going to say yes, but remember, it's also the erosion of the currency. Now, Social Security, though, is one of the things that Alan Greenspan has been on his soapbox about quite a bit, because that's one of the entitlement programs. And I did a webinar on the retirement plan time bomb, so you might want to take a look at that. But remember, when they first set up the Social Security system, there were something like, I think, 156.8 workers to provide for one beneficiary. I think that the latest data they had went back to 2013, where there were now 2.8 workers to provide benefits for one worker, because they didn't keep any of that money, that tax money that we all paid into. They spent it. So it's not like they have it sitting anywhere, and it's been running deficits since 2000. I'm pretty sure 2007 is when the Social Security system started to run deficit. And, that's only escalated. The baby boomers didn't even start to take it until 2013. So, they'll use that and threaten it, but there is no politician that wants to touch that issue, and that's part of the problem. So, I'm not really sure about the pensions. Actually, I think the pensions will be turned over to the PBGC, which is the Pension Benefit Guarantee Corporation, and they will cut benefits massively. Social Security, they're going to have to restructure.
Well, and then Ray had an article, or a letter that he received that a client had forwarded him.
Yeah.
That said that even if it went to PGBC, that they estimated that it would run out within 10 years because PGBC is still underfunded.
Yeah, they're all underfunded. Go watch the webinar on, the retirement plan.
And that was the actual pension itself that said that to the customer in the letter.
Yeah.
Which I thought was really interesting.
Yeah, I think we've been having a little bit of trouble with our copy machine, but I think that Betty was going to scan that. So we'll send that. Can we send that letter out? I don't know. I don't see why not.
It doesn't have any client disclosing information on it, so. I'd have to take a look at it again.
All right, we'll take a look at it. If it's something we can send you to get a sample, to see. But yeah, go and watch the
You could at least cut out
retirement.
excerpts so that none of this stuff was on there.
Right, yeah, we won't send out anything personal, but, so you can see the body of the letter. The retirement plan system, whether it's a 401k where basically you're forced into the fiat markets and it's because of all the fees and the wealth transfer, or it's the pensions, or it's the entitlement programs, they're all severely underfunded. All of it, severely underfunded. Watch that, you'll see the proof of it. You've got to be a lot more independent, fiscally, and in every way that you possibly can. So, how has the numismatic coin market been behaving year to date? It's actually up year to date, isn't it, Eric? Eric would know that one actually.
Yeah, it's up a little bit, and when the Brexit happened, we got a call from the wholesalers that said increase prices. What was it, $80 across the board, because everybody was freaking out because of what happened. It leveled back down as people kind of in the wholesale world sort of kind of got to grips with what was happening over the weekend. But
See,
it's
keeping it calm.
right, and the thing about the numismatic market, and I know Lynette's talked about it in the past, which is that it really when buying picks up from the general public, because it's so supply and demand based. Sure, the spot price of gold definitely affects the numismatic gold,
yeah,
especially the lower quality 62s and stuff like that. You'll see that actually track up with the spot price. So I can pretty much say with confidence that if we looked at it from January 1st to today, it's trended upwards, because the spot price is up something like 25% over the last 6 months. But when we really start to see those types of coins really take off is when we have major shocks.
Right.
Because that sends people into a buying frenzy of these types of coins. That's why we've seen them go up. I think it's like 5 times. They've increased over bullion 5 times in the last 40-something years.
Yeah.
Where even we've had times where bullion went flat and numismatic coins spiked up, like after 1987.
Well,
right?
yes, and then also in 2008. Okay.
2008,
they hammered,
2009.
Exactly, but in 2000,
and gold was going down.
Yeah,
that's right.
Actually,
it went from like 600 to 1,000 in March to 692 of October, and that was in 2008.
The spot market,
that was in
Wall
2008.
Street's manipulated.
Yeah.
Right.
The spot market went down, and the numismatic coins were going up dramatically.
Exactly, and actually hit this trend high in December of 08. Okay, because that's a physical only market. So whereas the Wall Street spot market, wow, it's a button push and $1.10 to control 100 physical ounces. It's nothing. It's chump change.
So to sort of answer your question, it's up. It's definitely up over the course of the last 6 months, but where you'll see the most action is if we continue to see these kind of shocks to the system, more buyers will come into the market, which will push the prices up even further.
However, just since you bring this up, Chris, I also want to point out, because I know I did a couple of portfolios this morning, and I was like amazed at the prices. I thought that they would be higher. Remember, I was on vacation. I was actually out of the office, people.
Higher
on Friday.
Since Friday, or
Yes.
higher? Okay.
Yes. I thought because.
Oh, when you went to go actually build a portfolio, I thought you meant doing a review for somebody.
Oh no! When
You
I
were
went
gonna
to
make
build.
one. Okay.
Yeah, I mean, we still had. I bought some 62s for just a little bit over $2,100 this morning. I'm like, seriously, with super low pops. I was like, it's a gift.
Mm-hmm.
I mean, that's what you gotta get. The numismatic market is basically trading with almost no numismatic value in there.
It's definitely undervalued in as far as the premiums are concerned, for sure.
Yeah, absolutely. And so
It's been in that trend for a little while too.
Exactly.
It's due for a breakout.
well, I don't even care about the breakout. I say you take advantage of it while you have the opportunity to take advantage
Well,
of it.
yeah, I
and
mean-
get your position built.
As a disclaimer, we always talk about it as it's always first and foremost to hedge against crises and to protect your wealth. through this cycle more so than it is about making a bunch of money
Right.
on it. You're
Because
more,
what,
it's all
you're
about
going to
protection.
convert it into fiat? No, there are different functions for different things, and that's what you want to look at. But this whole system is engineered for wealth transfer, period. Well, what are the central banks doing? They're buying gold. Well, what are the ultra wealthy doing? They're buying gold. Okay, emulate them. It's real simple. They're not waiting.
Well, and Greenspan said it in the end of that article too. He said, isn't it interesting that, he said, we're off the gold standard, but isn't it interesting that central banks are buying gold, right? They're buying it like crazy.
Exactly. I will get that out to everybody here, that interview. I have it. I had Tiffany capture it. She did a great job.
That's a long question, so you
Okay,
get on that.
so
I'll
let's
get you
see.
some water.
Okay, thank you. Oh, hey, George. Okay, to avoid a lengthy question, too late, would it be at least better to hold cash out of the checking account in maybe a safe deposit box just to get and keep it out of the system? At least the cash would be available now as opposed to when the hits the fan and no one can get their money from the bank teller? Or do you see the banks literally shutting the doors and not even having access to the safe deposit box? Yes, I see the banks literally shutting their doors on a bank holiday and you would not have access to the safe deposit box. So perhaps there is a private safe deposit box in your area. Here in Phoenix, thank you so much. Here in Phoenix, there are 2 that I know of. But remember, and we have this little one sheet of, where to hide things, because you don't want to be obvious, but there's a 2-inch kick plate underneath most people's cabinets.
Mm-hmm.
And that's like
And
dead
we've had
space.
I've had customers tell me that they hide it there.
Yeah, and I've done that, in the condo. I'm not going to tell you where I have it now, but when I lived in the condo, I just put in a false floor. And yes, whenever I wanted to access my cash, and I have a tendency to you want to divvy it, you don't want it in one place, but I would keep barterable, my barterable silver, at least a chunk of it, and my barterable gold with my cash, because the cash is your first line of defense. Right? And then you go to the barterability of the silver.
And if you're worried about keeping it at your home, you can insure it as well. Like we've had clients insure with Hugh Wood. They are big time precious metals. So you can keep it in your house. I'm assuming that's what you guys were talking about, where you could keep it. You can keep it at your house and store it and actually get an insurance policy against it so that, if you did occur some kind of a theft or whatnot, that you would be covered. And it's relatively inexpensive, especially if you're holding it in a safe on your property that's bolted to the ground, because they like extra security. Like if you have an alarm on your house, you got video surveillance. Doesn't have to be something crazy good, just decent amount of security, and then a safe that's bolted to the ground. The insurance rates on that is really, really reasonable. So you can keep it at your house and also have that peace of mind that you're covered in the event that there's a loss.
But, even in that, I want to point out one thing, too. And that is that at least if you have it at your house, you're not going to announce it. People don't really think about it. At least you have the opportunity to defend it. If you keep it in the bank and they say, nope, you can't come in and get it, boop, oh, all your wealth disappeared. There's no opportunity for you to defend it.
Mm-hmm.
Okay? And that is a really important piece, in my opinion. That's a super important piece.
Well, that's why we all own it.
Exactly. Yeah, exactly. Outside of the system, I don't hold it. I don't hold anything in a bank safe deposit box. But there may be some private ones, and we have that one sheet.
Well,
so talk to your precious
even our business banker says that you can't hold the bullion in there.
Right,
In a
you
safe
can't
deposit
hold
box on their property.
Right.
So.
Right. It's classified as hoarding. So you're a saver if you put it in the system and they have access to it, but you're a hoarder if you take your wealth out of the system. Really interesting. We're gold bugs, but there's no such thing as stock snakes. And I think there are a lot of stock snakes. Okay. Since silver has a significant industrial value aside from monetary value, what is the investment case for numismatic silver? Really good question, Chris. Well, here's the reality. When they do the reset, even if they suppress the visible price of gold and silver, The reason why they have intrinsic value is exactly as you said, because both of them are used across every single avenue of the economy. Now, and they both will go to fundamental value. You can do numismatic silver. It's just that, and you can certainly do it. And, you know, if you buy it below fundamental value, that's really a hedged bet anyway. The current fundamental value of an ounce of silver is something like, I'd have to double check, but it's something like $566. So if you buy a numismatic silver coin below that, and if they reset today, which they're not going to reset today, but if they did, it would still go to its fundamental value. But it's the secondary currency metal. So for the whole strategy,
we don't really, Chris, just so you know, the reason why we like $20 gold coins is because they're readily traded in the market.
Right.
So that makes it easier for supply and demand factors to make prices rise, right? Whereas over the years, we haven't seen a ton of really action into, and when you say numismatic silver, I'm speaking directly to graded silver like Morgans and peace dollars that are actually graded Mint State 63 or higher, really. We haven't really seen much price action in that because there's not as much demand from the general public for that type of coin, where it's totally different with the $20 gold coins because there's a lot more demand there for that type of investment. So that's mainly the reason why you don't see us selling that, and we stick to the $20 gold coins for that very reason.
Right, broadest base of buyer. So what are your thoughts about taking a super low interest loan or even cash against a credit card to be able to invest in gold? I don't feel good about that. I mean, you know, the problem is too much debt. So taking on debt to do this, because yes, definitely the system is breaking down. But we've all experienced it staying insane a lot longer than sometimes you can stay solvent. So, you know, I don't really recommend, and I've never ever recommended anybody taking on debt, taking out a second mortgage. I mean, I had one client years ago when the crisis was unfolding in 2008, and he called me up and he asked me that question. He said, well, you know, my house is paid off, but I'm thinking that I'll take out a loan and then blah, blah, blah. And I said, oh yeah, I would not want to recommend that at all. Well, he went to another company, and that's exactly what he did, was he took out a second mortgage on his house. And then, of course, that was 2008. They managed to postpone it all this time. And over that period of time, because I've had communication with him many times after that, you know, he had to sell off those things to keep himself above water. Yeah. And because of the manipulation, it was not a good deal. So this is yourself. Not... Right, and so in good conscience, I couldn't tell him it was a good thing to do then, and I can't tell you that it's a good thing to do now. We're about supporting your goals in the best possible way, and I really don't think that's one. Do not take on debt.
Yeah, and especially if you were all into gold and silver, and let's say you pulled out of other investments and you went into gold and silver, I certainly would not want to see you go into debt to get more. I just don't think that makes sense to do.
Right.
And I don't know your position.
Right. So. And everybody's position is different, but this is about ultimately ending up debt free, like if you have a mortgage or something like that. And particularly when you talk about credit card, like fixed rate debt, you can service by repaying with dollars that have no value. I can't tell you the day they're going to do the reset, and that opportunity will be. So that's the problem. It's the timing could be a bit of a challenge. But credit card debt is variable rate debt. And when we do, and Alan also in this article, he talked about inflation, and he said, well, we don't see it on the horizon yet, but by the time we see it, it's going to be too late. So variable rate debt, you never get out of debt. It's governments that get to reset their debt, not people with credit cards, and that just kills you. So please don't do that. Okay, it would hurt my heart for anybody to do that, really. And Chris asks, do I see a greater upside potential for silver compared to gold? Well, when you ask that question, what you're really saying is in terms of dollars. But if the dollar has no value, then you could get, like in Germany, it went from 170 marks to 87 trillion marks. Now this is for gold, but think about this. You couldn't convert that 87 trillion marks into a loaf of bread. So what difference does it make? Look at Zimbabwe. You got trillionaires that are broke and that are starving. So it isn't, does it have more upside potential? Well, maybe. In terms of
I think he's maybe
dollars?
asking the question too from like the gold to silver ratio.
Right. But
I mean,
that's
we've
that.
definitely seen
That still is translated into the dollar function.
Right.
And when you go through a currency
I think that's
reset,
what he's asking.
Yeah.
You know what I mean? Because sure, silver was at $49 an ounce and now it's at 17, something like that. And gold was at 1900 and now it's 1300. So if they both were to just return to their previous bull market high, then there's more upside in silver in terms of dollars. Yes.
In terms of dollars, and that's critical. Because during currency resets, which is really what we're dealing with here, gold always outperforms because because gold is the primary currency metal. Okay, so silver's function for me, and in all the studies that I've done, and I've been studying currencies specifically since 1987. At the end of the day, through these kinds of resets, silver actually underperforms gold, but its function is for your day-to-day livability. So you really need it for both, and it just kind of depends on what it is you're trying to accomplish. But I guarantee you this, and I can't give you a lot of guarantees. By the time we go through the reset, you're not going to want to convert any of your metals into dollars unless you need to pay a tax bill or something like that. Unless there is a specific reason why you would need to do it. But to capture dollars at that point, no, you wouldn't want to do it because you'd be really well aware of how little value those dollars have. So what is the advantage, Karen asks, what is the advantage of buying silver proof coins like a 2016 Silver Eagle proof? I don't have an answer for that.
Really, it's just a premium. It's really a premium play because if the market gets tight on silver proof, then I'm speaking from it because I do all the buying. You'll see the premiums increase that the wholesalers will charge. So if it's $1 over spot, and I'm just throwing out a number. If it's $1 over spot and the silver proof market gets hot, then you might see it get to $5 over spot, and that's where it's just a premium play in the proof market, really.
But that still goes back to converting back to dollars. Okay, and I know that's how we've been trained. We've been trained to think in nominal terms, like a $20 bill and a $20 bill. Oh, they're both $20 bills. But if you had one 10 years ago and you have the same one today, it buys a whole lot less. So we've been trained to put value in dollars, but dollars have no value until you convert it into something, a good or a service. So, I don't really see any advantage.
Do you ever put silver proof in people's portfolios? No.
Never. I don't think I ever have either. In all the years I've been here, today's the 27th? Tomorrow is my 14-year anniversary here. Yeah. And I don't think I've ever done silver proof in anybody's portfolio. Is it okay to get out of an IRA to buy gold? Yes, Cheryl, it is okay. We can account for the taxes. We have to take a look at it. But you account for the taxes, and even if you have to pay penalties, that we can structure the portfolio to recoup those costs. And actually, personally, I took my distribution. I had a SEP IRA, and when we entered the third phase, I took distribution of it. and I paid my taxes, and I was at the highest level, and I paid my penalties because I wasn't 59 and a half then, and I'm 61 now, and I didn't care because timing is the biggest challenge of any technician. I could tell you what's happening, I could tell you what's going to happen, I just can't tell you the exact moment. So,
and I think it's important for Cheryl is what she's saying is every situation is different. So you want to analyze it and look at it to make, to see that all of the ramifications
Correct.
that happen for your situation. A lot of times we'll have clients that get out and they'll go into gold, and we always want to look at it before because we want to make sure that they hold back the appropriate amount of taxes for that. It's super important to look at that in depth before you make your move.
Exactly. So if you talk to your precious metals consultant, they can help you. If they need, I'm always accessible as well to help look at the portfolios and look at the tax circumstance and the IRAs and what you have in them and all of that. I mean, we all work together as a team.
And with her stockbroker background, she's always got a keen eye for all that important stuff. So.
Right. But yeah, I mean, personally, I don't have very much in the system. And I don't intend to add to that. Now, that has definitely not always been true. And moving forward after the reset, when all of this garbage is burned off, there are incredible opportunities that are most likely to present. I'm just looking at a repetition of history. I mean, there are things that happen to real estate that'll create those challenges if you're not prepared, but opportunities if you are prepared. The same thing in the stock market. Your challenges, if you're not prepared, you ain't getting out. Maybe they've borrowed so much that they're not going to survive this, etc. Look at what the insiders are doing. These are the things that I really actually like to look at. So now Roy asks, what do I think of the companies that say they can set you up to hold gold and silver in your IRA SEP in your home? I think it's a scam. I would like you to think of, now I know you can hold real estate titles inside of an IRA, but I want you to think of the investments typically held in an IRA. The government does not allow you to hold them personally. Physical real estate is an immovable asset. So these companies that are saying that, the IRS has really not come down and dictated on it. I personally would not take that risk. I think they would classify it as a distribution, and I think they would flag you. And then you'd really have to disclose everything. I think that my personal opinion and what I did for myself, I paid my taxes, I paid my penalties, and I control it. And they're not going to mush in my physical metals business. I'm not an IRS fan, and I don't want to get them any more involved than I have to, and that's my concern. You can't hold it in your home. You have to hold it in an approved depository. You have to become an LLC and do everything through the LLC. If anybody says you can hold it in your home, then I'd say run the other way, because they're not giving you appropriate advice. They're setting you up to get into trouble. You can't hold it in your home. Even if you did the LLC, you still have to hold it in an approved bank safe deposit box like Chase or probably Wells Fargo or Bank of America or one of those large systemically important financial institutions that are way over leveraged. Thank you for coming to this emergency session. I know that we're just winging it today, but this is an important event, and remember, it is about the breakdown in confidence. But remember, what's holding this entire system together is public confidence. Banks don't have confidence in each other anymore, period. End of discussion. It is the public. And this was a super visible display that they are losing confidence rapidly. So be safe out there, my friends. Execute that strategy. If you haven't done it, just get it done. And then you don't have to worry about it. Then these kind of events, they don't impact you. If you have money in the system, get it out. Please get it out. Please. If you buy low, and I'm talking about the gold and the silver, it's severely undervalued. If you lose a little bit on a stock position, big deal. We can recoup it. If it costs you a little bit in taxes or penalties or fees or blah, 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 you know, the fundamental value of gold is way north of 8,500. God knows what it's going to be by the time they reset. But if you can buy it at 1,300, 2,300, 5,000, anywhere below fundamental value, it's a bargain. Get it done. So have a good one, and we'll talk again soon. Come next week. You'll like the one next week. It'll help you understand things a whole lot more. Bye-bye.